All right, guys, welcome back to the Independent Investor Channel. My name is Ryan. I really strive to break down a lot of barriers to entry for new investors who don't think that they have enough capital to start investing in the stock market, or more importantly, getting the idea of investing in themselves, paying themselves first, and finding that little bit of money in the budget to do just that. And I think there's a lot of cliches out there. You have to have money to make money. And I think it turns a lot of investors off to even seeking out the prospects of entering into the stock market. In this video, I'm going to run you through an exercise, and I'm going to let the numbers speak for themselves. And I'm going to run through a scenario, and I'm going to use an annual salary of $24,000 as a benchmark. $2,000 a month minus taxes, it puts you around $1,600 to $1,700 of take-home pay. And I understand that there's going to be some sunken costs, there's going to be rent, there's going to be food, fuel, but this is going to be an exercise of reality for a lot of people in understanding that perhaps maybe instead of discrediting or disqualifying yourself as being a potential candidate, or not thinking that you have the adequate amount of income to invest in the stock market, hopefully this allows you to open your eyes to the prospects of putting investing a little bit higher on the prospect list or the priority list, in understanding that this is absolutely something that you can do. And I think that little glimmer of hope is all anybody ever really needs to actually see the statistics, to see what, in fact, $50 a month can render you into the future. And I'm going to run you through the compounding calculator. This is going to be an introduction for a lot of you guys with regard to the absolutely most important tool that I offer in the links to every single one of my videos, and I hope it's a utilized tool. If it's your first time on the Trading Academy's website, you're going to really enjoy this eye-opening exercise where I walk you through some very realistic scenarios and what it can actually mean for you down the line, specific to the program that I advocate for so heavily on the Independent Investor Channel. So right now I'm going to kick you into the compounding calculator, the one that allows you to compare the fee structures. You guys are really going to find a lot of value in this. So let's kick you over to the Trading Academy. Please enjoy. All right, super cool. So I've dropped you guys into the Trading Academy. This is really one of my absolute favorite investing tools that I've covered over the last 3 years of the channel. And I think a lot gets missed when we look at these compounding exercises. Certainly you guys understand how important compounding calculators are, but I emphasize that a regular compounding calculator can be extremely misleading. This one specifically that allows you to compare investment fees is really the key. And I wanted to kind of break down, I have a lot of folks that come into the channel and they feel like they just don't have enough starting capital to start their investing road. And that's typically why I always come back and say, look, if you could start with $25 a month or $50 a month or whatever you can start with, understanding what that can mean into your future can really give you the validation and, quite frankly, the motivation to do what you need to do to understand what goals you're looking to approach later on in life. So I drew up this quick example for you guys to really walk you through my methodology and let the math kind of speak for itself. Now, if you're looking at a typical situation here with $1,000 of starting capital, this is a very, very common occurrence on YouTube where channel creators will walk new investors through what they should do with their first $1,000. The $1,000 is really just that boost or head start on an investment account. But if we invest that amount for 40 years, if we're assuming that the person who is starting is 20 or even 30 years old, we'll draw up a time horizon of 40 years just to draw the point here that even at $50 a month with the compounding schedule can be very, very powerful. And I kind of used this $50 a month as somebody who potentially maybe earns $24,000 in an annual salary, which is $2,000 a month. And this $50 I felt was a good realistic number. Now that kicks out at about $600 per year and at about 2.5% of the total income. So keep in mind, guys, you know, 2.5% of your total overall earned for the year is going toward a retirement account. Some of you will look at that and say, wow, Ryan, that's really conservative. I can do that, or maybe get motivated to do a little bit more. But the beauty in this compounding calculator is that you can take and you can compare these three fees right here, fee 1, fee 2, and fee 3. And for example's sake, I've used what is the expense ratio in the S&P 500 here at 0.02, a comparable fee structure in a managed account of 1% and 2% respectively here, just to demonstrate for the sake of example where this will kick us out here. So you go in here and you view report, and it's really awesome. It'll give you these fee breakdowns into 3 different categories. Now, over the course of that 40 years, you will have invested $25,000 of just principal capital. And we all understand the power of compounding in this column here with the 2% fee. That $25,000 is going to have a chance to grow and compound to $81,000. Not bad. You've tripled your money. Not bad. That's just the mathematics of it. It's intriguing enough to look at these things. And then we drop it down to a 1%. Still, the 25,000 is unchanged. That is the constant in this example, which gets us into 6 figures. Very, very impressive. You've quadrupled your money here. Now, the interesting part about this is, and the reason why, and the very root of my independent investor channel, is that we live in this world over here, okay? We're accepting a fee of 0.02% within this S&P 500 ETF, for example. So we're making 6.98 realized in this. Now, this is again is the constant that's contributed over time. And then we're talking about this here at $140,000. Now, keep in mind, that's about $57,000 of difference over the course of this program. And this really should be a step into a much broader world in investing. This is the people out there who are reasonable should actually look at this and say, wow, this is just by nature of the account that I choose, whether or not you go with a managed account over here and either electively or unknowingly subject your money to this 2%. And this is the world we live in over here. This is why I advocate. There's very few videos that I do where I do not mention the prospect of the self-directed Roth IRA. And that's where you can actually get close to realizing this, if not fully realize this low expense within that account, which renders the $57,000 difference between this and this. All other things remain consistent except for the fee structure within this account. So that's just with a $50 a month contribution here. It's outlined the scenario. That's what I love about this website. It's absolutely the most important tool that I share. And I post it to every single one of my videos. I don't know how used it is, but I really hope that folks are using this to have the same effect over themselves that I did when I first kicked on here, because I don't know of a lot of other investing compounding calculators that allow you to do this. Compare investment fees. It's very, very important. So we kick back here. And for example's sake, we're going to run the example here. Now, remember, that was 2.5% of a perceived $24,000 salary. And I understand, you know, $24,000 when you're paying rent and you're paying gas, you're paying food, fuel, expenses, insurance, etc. Maybe you're raising children, maybe you're by yourself. That's really tough. I understand that. You're rubbing nickels together, and I've been there and I've done that. And a lot of people will not look to investing as a primary option, but I will contend that it is in fact possible if you make it a priority. If you have to make it a priority for that very reason. So if we take this $50 and assuming that we're still making that $24,000 a month, and we kick this up to 5% of the annual total income for ourselves, just for example's sake, This is the exercise. I want everyone to just follow along with me, but this should really strike your curiosity up. If you started with you could change this variable here to 25,000 and just see how it changes the actual outcome of this. But I'm trying to keep everything to remain consistent and assume that somebody makes a $24,000 salary per year, is probably bringing home about $1,600 or $1,700 minus taxes per month. So this is realistic. And so when we kick this up to 100 and we go ahead and we view this report, this is where the numbers really start to get staggering. And a total contribution over the course of that 40 years at just shy of $50,000 is going to render you your $250,000. And a lot of people will say, okay, Ryan, it's magic. It's not. And the irony in this whole thing is that there's so many people out there that are making those lower than average salary or just below minimum middle income salaries, and they don't think that this is ever achievable. And if you can just run these numbers and kind of give yourself a benchmark of what you're shooting for. Now, the real takeaway here in this exercise is you may look at this and go, man, alive, Ryan is really laying this out for me. This is very, very motivating. This is amazing. I never thought that this was achievable. It is achievable, but I want you to pay attention to this is the independent investor column over here with the low expense at 0.02. But look at the impact over your money if you kick over here and you do the exact same thing, but that account is subject to a 2% fee. Look at the difference, guys. You're giving away $112,000 there, $106,000 in this column over here as opposed to just staying over here. Now, the final example that I want to run for you guys, and again, this is assuming that we are making a $24,000 salary, okay? This is a very, very realistic thing, and the whole purpose of this video is to break down barriers between what people think is possible and what is actually possible in the stock market. So if we kick this up here, let's do this to $240 per month, just shy of $250. That'll be 10% to the total annual income that we're figuring here, just to keep our numbers straight so you guys can follow with this example. When we kick up here and view the report, is it possible to become a millionaire? Certainly, with some certain adjustments to this, it absolutely is, but $600,000 is extremely impressive. And this is what I talk about. Somebody that's making $24,000 assumed to never ever move up in their income bracket their entire life, which is very unrealistic. If somebody's willing to work, it's fair to say that there are going to be certain opportunities in your life to move up, but for the sake of this example, at $24,000, contributing 10% of your annual income, look at this figure, guys. This is unbelievable. This is sacrifice right here. This is sacrificing enough to get $116,200 of money that you've paid yourself over your lifetime. This should absolutely be a priority for each and every one of you guys that are tuning into this channel, maybe making an annual salary of 30 grand, 25,000, whatever it is. But this is possible with 10% contributed on your income. The scary part about this, and again, I kick you over here to the difference between the two scenarios. Look at the difference between these two, almost $250,000. $250,000 for people who seemingly are always looking to opt for representation from a financial planner and subjecting their money to this 2% fee as opposed to just taking a passive approach to the stock market and looking to enter into this column, which is where the independent investor channel lives, breathes, eats, and sleeps and teaches from. This is absolutely mind-boggling to think that this difference in fee can make the difference of almost $250,000. Guys, thanks for tuning in. I'm going to kick you back over to YouTube. I really appreciate running through this bracket of what could be potentially possible and foreseeable for somebody who's making an annual salary of $24,000 and what you could actually do by contributing 2.5%, 5%, and finally 10% of that over the course of 40 years. So I'll kick you back into YouTube, guys. Thanks a bunch. Right on, guys. So welcome back out of the Trading Academy. I really hope you appreciated this exercise for somebody who maybe makes an annual salary of around $25,000 or $24,000. This was really aimed at demonstrating not only the prospects that you can do it. If you put investing a little bit higher on the priority list, you can absolutely do it. But the real takeaway from this video is to compare the fee structure in a managed account and against a self-directed account. That's the real takeaway. And you saw there the savings just by nature of the account that you choose over the long term, that it can render a difference of $250,000, and you can adjust those numbers. And can you be a millionaire with a $24,000 a year salary? I contend that you can. The sacrifices have to cut deep for somebody that's rubbing nickels together and living paycheck to paycheck. The real takeaway is, where do you currently put investing in the priority list? And hopefully by watching this video, you were able to maybe make it more of a priority in your life, because you've been able to really see the prospects and the benefits of putting that more of a priority in your life. Guys, thank you so much for tuning in to the video. You want to subscribe to the channel. Make sure that you leave the comments on this video, your thoughts and comments, and share the video with anybody out there that's looking to get involved in the stock market that can benefit and really streamline their knowledge before they enter into the stock market and really understand why they're doing so. Guys, thank you so much for tuning into the video, and good luck in your investment future.